ExamPrep.School. Alaska Accident and Health Insurance producer Exam. Exam code INZAKE Health 0 or OP Health 02. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Alaska laws, rules, and regulations common to all major lines. Alaska laws, rules, and regulations specific to health. Field underwriting procedures. Other insurance concepts. Policy provisions, clauses, and riders. Social insurance. Types of policies. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under the own occupation definition in an individual disability income policy, the insured is considered totally disabled when the insured A. Cannot perform the material and substantial duties of their specific occupation, even if they can work in another occupation. B. Cannot perform the duties of any occupation for which they are reasonably suited by education, training, or experience. C. Is unable to earn at least 80% of pre-disability income in any occupation. D. Remains continuously absent from all work for a period exceeding the policy's elimination period. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The own occupation definition focuses on inability to perform the essential duties of the insured's specific job, regardless of ability to work elsewhere, triggering full benefits under that definition. Reason B is not correct. This describes the any occupation definition, which is stricter than the own occupation. Reason C is not correct. This reflects a percentage of earnings threshold rather than the own occupation trigger. Reason D is not correct. Elimination periods defer benefit payments but do not define total disability. Question 2. The any occupation definition of total disability in a disability income policy requires that the insured be unable to A. Perform any occupation for which they are reasonably qualified by education, training, or experience. B. Return to their prior specific occupation even if suitable alternatives exist. C. Earn more than 50% of pre-disability income in their own occupation. D. Perform at least one essential duty of their regular job. The correct answer is A. The any occupation definition triggers total disability benefits only when the insured cannot work in any job suited by their background, making it more restrictive than own occupation. Reason B is not correct. This describes own occupation, which is less restrictive than any occupation. Reason C is not correct. A percentage of earnings relates to residual or partial disability, not any occupation total disability. Reason D is not correct. Inability to perform one duty refers to own occupation, not the broader any occupation standard. Question 3. Under presumptive disability provisions in a disability income policy, the insured is automatically considered totally disabled when the insured experiences A. Complete and irreversible loss of sight in both eyes. B. Inability to perform at least one essential duty of their regular occupation. C. Loss of hearing in one ear causing substantial impairment. D. Reduction of earnings by at least 50% due to illness. The correct answer is A. Presumptive disability provisions grant full benefits upon total and irreversible losses of critical faculties, such as sight in both eyes, regardless of actual work capacity. Reason B is not correct. This refers to an own occupation trigger rather than presumptive losses. Reason C is not correct. Presumptive loss requires loss of hearing in both ears, not just one. Reason D is not correct. A specific earnings reduction describes residual disability, not presumptive coverage. Question 4. Under a residual disability rider, the monthly residual benefit is typically calculated by A. Multiplying the proportionate loss of pre-disability earnings by the policy's full disability benefit. B. Applying the full disability benefit for any earnings loss exceeding 50%. C. Prorating the benefit based on the number of days disabled during the month. D. Reducing the full disability benefit by a fixed deductible amount. The correct answer is A. Residual benefits are based on the ratio of lost earnings to pre-disability earnings, multiplied by the full benefit amount, ensuring partial disability yields a pro rata payment. Reason B is not correct. This threshold approach does not reflect the proportional earnings calculation in residual riders. Reason C is not correct. Day count prorating applies to short-term or indemnity provisions, not residual calculation. Reason D is not correct. A fixed deductible reduces benefits but does not determine the residual benefit formula. Question 5. Sarah recovered from a back injury and returned to work. Then after 150 days off, she experiences the same disability under her policy's recurrent disability provision. How will the insurer treat her new claim? A. As a new disability requiring a full elimination period. B. As a new disability but waive the elimination period. C. As a continuation of the prior claim with no additional elimination period. D. As a new claim using any remaining benefit period with a new elimination period. The correct answer is C. The correct answer is that a recurrence within the specified window is treated as a continuation of the prior claim, so no new elimination period applies. Reason A is not correct. Requiring a new elimination period only applies if the recurrence falls outside the specified reintegration window. Reason B is not correct. A waiver of the elimination period occurs only for recurrences within the window, but they are not classified as new disabilities. Reason D is not correct. Applying a new elimination period contradicts the policy's rule that recurrences within the window continue under the prior claim. Question 6. During policy selection, the underwriter explains that the elimination period in a disability income contract primarily serves what purpose? A. Determine the maximum benefit period for claims. B. Coordinate benefits with other disability income coverages. C. Act as a time deductible by excluding short-term disabilities, thereby reducing premium costs. D. Set the frequency at which monthly benefits are paid. The correct answer is C. The correct answer is that the elimination period functions as a time deductible, excluding brief disabilities to lower insurer risk and reduce the policy's premium. Reason A is not correct. An elimination period delays benefit commencement. It does not determine how long benefits are payable. Reason B is not correct. Coordination clauses handle overlaps with other policies, not the elimination period. Reason D is not correct. Payment frequency is unrelated. The elimination period only affects when payments begin. Question 7. A policyholder chooses between a 24-month and a 60-month benefit period for disability coverage. What is the impact of selecting the longer benefit period? A. It reduces the premium cost by lowering the insurer's exposure. B. It increases the policy's premium cost while extending the maximum duration of monthly benefits. C. It shortens the elimination period before benefits begin. D. It changes the policy from non-cancelable to conditionally renewable. The correct answer is B. The correct answer is that lengthening the benefit period raises the premium because the insurer's liability grows, while benefits may be paid for a longer duration. Reason A is not correct. Longer benefit periods increase insurer exposure, which raises rather than lowers premium costs. Reason C is not correct. The elimination period is a separate contract term and is not affected by changing the benefit period. Reason D is not correct. Benefit period selection does not alter the policy's renewal classification. Question 8. Which feature is most characteristic of a basic medical expense insurance plan? A. Pays a flat daily hospital benefit according to a schedule. B. Reimburses actual hospital charges up to an overall policy limit. C. Combines basic scheduled benefits with major medical coverage. D. Provides a lifetime per person, aggregate limit for all expenses. The correct answer is A. The correct answer is the flat dollar daily benefit schedule, which is the hallmark of basic medical expense coverage. Reason B is not correct. This describes reimbursement of actual charges rather than a scheduled flat benefit. Reason C is not correct. This refers to a combination plan rather than a pure basic expense plan. Reason D is not correct. This relates to a lifetime benefit cap rather than a daily per diem feature. Question 9. In a major medical policy, the term stop-loss limit refers to A. The total lifetime maximum benefit payable under the policy. B. A fixed daily limit for hospital room and board expenses. C. The total amount the insurer will pay per claim after deductible. D. The maximum out-of-pocket cost the insured must pay. The correct answer is D. A stop-loss limit caps the insured's total out-of-pocket expenses after deductible and coinsurance reach a specified amount. Reason A is not correct. This describes a lifetime benefit maximum, not an out-of-pocket stop-loss cap. Reason B is not correct. This is a scheduled benefit feature, not a cost-sharing out-of-pocket threshold. Reason C is not correct. This refers to insurer liability per claim rather than the insured's expense cap. Question 10. Which feature is included in a comprehensive major medical insurance policy that is not present in a basic medical expense plan? A. Flat dollar benefit schedules for specific services. B. Absence of any deductible prior to benefit payments. C. Per diem limits on hospitalization days. D. A coinsurance provision requiring cost sharing after deductible. The correct answer is D. Comprehensive major medical plans include a coinsurance provision requiring cost sharing after the deductible is satisfied. Reason A is not correct. Flat dollar schedules are a feature of basic plans, not comprehensive coverage. Reason B is not correct. Comprehensive major medical plans do include deductibles before benefits begin. Reason C is not correct. Per diem hospitalization limits are typical of basic plans, not comprehensive major medical. Question 11. Which statement correctly describes an embedded deductible in a family major medical policy? A. All family medical expenses must meet the full deductible before any benefits are payable. B. Once one family member meets the individual deductible, benefits begin for that member. C. The deductible resets at the start of each month for all family members. D. Benefits are only payable when the family's aggregate expenses exceed the deductible. The correct answer is B. In an embedded deductible plan, once an individual meets their individual deductible, benefits begin for that person even if the family deductible is unmet. Reason A is not correct. This describes an aggregate deductible, not an embedded deductible. Reason C is not correct. Monthly reset is unrelated to embedded deductible structure. Reason D is not correct. This also defines an aggregate-only application, not an embedded feature. Question 12. A health insurance plan has a $600 annual deductible and then pays 75% of covered charges, leaving the insured responsible for 25% coinsurance until reaching the out-of-pocket maximum. In the first quarter, the insured submitted claims of $400 and $800. In the second quarter, a provider bills $500. How much must the insured pay for the $500 bill? A. $425. B. $375. C. $125. D. $500. The correct answer is C. The correct answer is $125. The insured paid the first $400 fully, then $200 of the deductible plus 25% of the next $600, $150, totaling $350 toward deductible Tanitsukai coinsurance. The deductible was met after $600, so on the $500 bill, only 25% applies, $125. Reason A is not correct. This combines deductible and coinsurance incorrectly by adding full 25% plus an extra $300 deduction. Reason B is not correct. This reflects incorrectly applying 75% coinsurance rather than the insured's 25% share. Reason D is not correct. This reflects paying the entire $500 without considering that the deductible has already been met. Question 13. Under a self-funded medical plan, an individual has a $1,000 deductible, then pays 20% coinsurance until an individual stop-loss limit of $5,000 is reached. To date, the insured has paid $1,000 deductible plus $2,000 in coinsurance. They now incur a $4,000 claim. How much will the insured pay toward this claim? A. $3,200. B. $800. C. $2,000. D. $4,000. The correct answer is C. The correct answer is $2,000. The insured needs $2,000 more to reach the $5,000 stop loss. After that point, the plan pays 100% of covered charges, so only the next $2,000 is owed by the insured. Reason A is not correct. This miscalculates by combining full coinsurance before and after the limit, rather than capping at the stop loss. Reason B is not correct. This reflects only 20% coinsurance on the full $4,000 claim, without considering the stop-loss limit. Reason D is not correct. This assumes the insured must pay the entire claim without any plan benefits or limit applied. Question 14. An insured has an out-of-network benefit that reimburses at 80% of the usual, customary, and reasonable UCR charge. The UCR is $150 for a procedure, but the provider bills $200. How much must the insured pay? A. $30. B. $50. C. $80. D. $150. The correct answer is C. The correct answer is $80. The plan covers 80% of the $150 UCR, $120, leaving 20% of $150, $30, plus the $50 difference between the billed amount and UCR for a total of $80. Reason A is not correct. This reflects only the 20% coinsurance on UCR without including the excess billed amount. Reason B is not correct. This reflects only the difference between billed charges and UCR, ignoring the insured's coinsurance share of UCR. Reason D is not correct. This assumes full payment of the UCR without applying coinsurance or benefit limits. Question 15. Under the standardized Medicare supplement, Medigap plans, what is the lifetime maximum amount available for foreign travel emergency benefits coverage? A. $25,000. B. $50,000. C. $75,000. D. $100,000. The correct answer is B. The lifetime maximum for foreign travel emergency benefits under standardized Medigap plans is $50,000 with 80% coverage after a $250 deductible. Reason A is not correct. This amount understates the required lifetime maximum specified by federal Medigap regulations. Reason C is not correct. This exceeds the standardized lifetime maximum set by Medigap guidelines. Reason D is not correct. This amount is not aligned with any standardized Medigap foreign travel emergency limit. Question 16. During which period does a Medicare beneficiary have guaranteed open enrollment rights for a Medigap policy? A. A 6-month period beginning the first month of Part B enrollment. B. A 6-month period beginning 3 months before turning age 65. C. A 12-month period after initial Medicare eligibility. D. A 3-month period after enrolling in Part A. The correct answer is A. The Medigap open enrollment period lasts 6 months starting the first day of the month in which the beneficiary enrolls in Medicare Part B. Reason B is not correct. Enrollment does not begin before age 65, it begins with Part B enrollment at age 65 or later. Reason C is not correct. There is no 12-month guaranteed open enrollment period for Medigap. Reason D is not correct. The guaranteed enrollment period is tied to Part B, not Part A enrollment. Question 17. Under guaranteed issue provisions, within how many days must a beneficiary apply for a Medigap policy after losing employer group health coverage? A. 30 days. B. 60 days. C. 63 days. D. 90 days. The correct answer is C. Beneficiaries with guaranteed issue rights must apply for a Medigap policy within 63 days of losing employer group health coverage. Reason A is not correct. 30 days is too short. Regulations permit a longer enrollment window. Reason B is not correct. 60 days underestimates the regulatory time frame of 63 days. Reason D is not correct. 90 days exceeds the maximum period allowed for guaranteed issue rights. Question 18. An applicant currently covered by Medicare Supplement. Plan G applies to purchase Plan F to reduce out-of-pocket expenses. Under Medicare Supplement replacement disclosure requirements, what must the replacing insurer provide to the applicant? A. A notification that the applicant has a 10-day right to return the new policy for a full premium refund. B. A guarantee of issue for all pre-existing conditions without underwriting review. C. A limit on any pre-existing condition exclusion period to no more than 30 days after policy issue. D. A statement summarizing the principal differences in benefits between the existing Plan G and the new Plan F. The correct answer is D. The replacing insurer must furnish a disclosure statement that outlines the principal differences between the existing Medicare supplement policy and the new one, ensuring the applicant understands any benefit changes. Reason A is not correct. The free look period is standard, but its duration notice is not part of the replacement disclosure notice. Reason B is not correct. Guarantee issue rights are governed by enrollment periods, not replacement disclosure requirements. Reason C is not correct. Pre-existing condition exclusion limits relate to underwriting rules, not to the disclosure statement itself. Question 19. An insured under a long-term care policy can no longer perform bathing, dressing, and feeding without assistance, but does not require skilled medical services. According to common levels of care definitions, which type of care is most appropriate for coverage eligibility? A. Skilled nursing care. B. Custodial care. C. Intermediate nursing care. D. Home health care. The correct answer is B. Custodial care refers to assistance with activities of daily living without requiring professional medical or nursing services, matching the described needs of the insured. Reason A is not correct. Skilled nursing care involves professional medical or nursing services beyond ADL assistance. Reason C is not correct. Intermediate care provides some medical services of lower intensity than skilled nursing, not purely ADL help. Reason D is not correct. Home health care typically includes skilled services delivered at home, not solely custodial ADL assistance. Question 20. Which components are included under the entire contract clause in a health insurance policy? A. The policy and the group certificate delivered to participants. B. The policy and all required claim forms provided by the insurer. C. The policy and any study or report prepared by the agent for underwriting. D. The policy itself, all attached riders and amendments, and the insurer's original application. The correct answer is D. The entire contract clause typically defines the policy, attached riders and amendments, and the original application as the complete agreement. Reason A is not correct. Group certificates summarize coverage but are not defined as part of the entire contract. Reason B is not correct. Claim forms are administrative tools, not formal parts of the contract. Reason C is not correct. Agent-prepared underwriting reports are not contractually binding components. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.